Morning, Steve Free in Chicago with the morning grain comments. Well, happy Friday to everyone, and it actually is sunny and just a tad warmer here in Chicago, and we should have a good weekend. As far as the overnight prices, were lower. Beans, corn, meal, and wheat are all lower. Some people think that might have to do with the fact that May options expired today, but yesterday we also saw a pretty big drop in May open interest, and also especially in the beans overall open interest. We actually saw open interest in Chicago wheat go up a little bit, which suggests we might have some new shorts if the weather cooperates. As far as U.S. weather is concerned, we look for an opening of drier, a little bit warmer weather across the Midwest over the next 10 days, and hopefully that'll get some planters rolling for the corn. That might be offering some resistance to the corn market. We're supposed to get some rain for the southern plains over the weekend. It might favor Oklahoma more than Kansas, but anything is helping right now, and that might be offering some resistance to the wheat market. In general, though, the wheat market continues to follow Russian prices and the outlook for the Russian crop, and we're expecting potential for another record crop this year and higher export demand, which could cut into U.S. export demand. Over in the beans and meal, beans are trading below 50-day moving average for the first time since early April. Meal is also testing that price for the first time in January. It kind of feels like three things might be happening in the bean market. Number one, we could be seeing a little bit of a slowdown in protein demand in China due to lower hog numbers. Number two, we might be seeing, because of the trade issues, a shift from China buying U.S. beans to Brazil beans, and we're looking at a record Brazil crop again this year. And number three, any delays, any price differences, anything like that could force farmers to add bean acres, and that could add to our carryout. So I think the bean market feels a little bit heavy right now. One note, our livestock analyst feels that after this little bounce in the cattle market and things like that, that we've got too much supply in both cattle and hogs, and he thinks that the markets are going to go lower, so it might be a time for producers to do some hedging. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.